Joining us right now is Potomac Wealth Advisors President and founder Mark Avallone. Mark, good to see you. Thanks for being here.
Good to be here.
Interesting what he said there. He said we don't see any need to move in either direction. So we've been talking about moving higher. Now he's bringing in either direction. So does that indicate that a Fed cut could be on the horizon?
Well, that's a significant change from the Fed, which tells us that they're aware of the slowing global economy. And the U.S. is correlated to global growth. We're not an isolated economic island. So eventually some of that is going to trickle over to here, and we're going to see muted economic growth. We've already seen that with earnings expectations, low single-digit earnings estimates. So if the market is fairly valued right now at this point by historical PE measures, what's the catalyst? We don't have a great economic catalyst either from the economy or earnings. So I think the Fed is getting ahead of that forecast right now with the comments from yesterday.
Trying to look at the economic cycle versus the presidential election cycle. Obviously, the state of the economy is President Trump's biggest talking point ever. And what are we looking at 15, 16, 17 months from now when we'll be in the final days of a presidential election campaign?
Well, that's a great question. This year, I think we're looking at an up market, even slightly up from here on out. Every post-midterm election cycle since the 1940s has been positive the year after the midterm. So this year, I think we're set. What's going to happen in the following year, that's the big question mark. And some people are forecasting a higher chance of recession in 2020. If that starts to happen and the Democrats can actually have a legitimate argument telling people how bad the economy is, then we could see President Trump's numbers drop. But for now, 2019 looks very strong, or at least reasonably strong from here on out.
Do you think we're going to see a recession in 2020?
No, I don't. I think we're going to see slow, muted growth. I think it's going to be more of what we had during the previous administration, where we had 1.8, 2.0 economic growth, relatively modest. We had a slowly rising stock market, nothing exponential, more incremental growth, not exponential growth.